everybody, and welcome to the Guru and the Other Guy. Who knows who the Guru or the other guy is, but we took a little bit of hiatus, but we're back. Guru, how are you?
Well rested.
It's been a while. I hear you. It's been a while. The folks are clamoring to hear wisdom.
Yeah.
So, what kind of wisdom do you have for us today?
Well, there's a couple of things that went on. Have you heard the phrase delisting?
What is it called?
Delisting.
Delisting, like the letter D?
Yeah,
Like the letter D, delisting.
Yeah.
Oh, you mean delisted, like delisted off of the.
Yeah.
So you mean like an expired listing almost?
The sellers are taking. A lot of sellers are taking their houses off the market.
Yeah, so like an expired listing. So it's off the market.
No, it's not expired. Yeah, when it's expired, they don't want to sell anywhere.
Right.
You can break a listing.
Yeah, you can break the contract. Right.
Yeah,
you
if
can
you don't want to sell, if you don't want to sell, you
take it off. You take it off. Yeah, so you call that a delisting?
Yeah, they call it. That's
all right. So I just call it an off-market property. But okay, so the property is being delisted. Okay.
Yeah, delisted. So what's happening? An inventory is falling again because either they have the 2, 3, or not 2, but 3 or 4 or 5% interest rate. So, they just don't want to do anything. So a lot of people. Well, I think when opportunity is there, you seize it because you could always refi. And the rates will eventually come down.
At some point, they will. They always do.
Yeah, but if you have a good bargain, if you have a good opportunity, carpe diem, seize the day. I mean, don't sit on the sidelines. If the numbers work, the numbers work. So you take the deal. I guess that's what I'm saying.
I agree with that.
And so, which leads me, we'll talk about that, which leads me to your seminars and education, which does benefit because there's opportunities out there.
Oh, right now is prime time for it. Prime time.
Yeah. So
hold on. Let me just. I guess that's what you're saying is that because you got a lot of properties that went off the market. A lot of people that can't sell because of two reasons. A, the interest rates are high. B, a lot of people don't have the money for the down payment, right? They can't script and scrape, 5, 10, 20% for a down payment. So, and the rates being so high, you're right. I think there's two sets of people. Those sets of people that do not want to sell their house because they've got 2 or 3% interest rate. And then you got the other ones that can't buy because of either no down payment or rates are high. Their buying power has gone down.
Right.
So, both, which is not good for the market.
No, it's not. And I'm going to give you some statistics. Right?
Okay. I'm going to go get myself a piece of paper and write this down. So go ahead.
Guess what the average age, I'll give you 3 ages, of the first-time home buyer. Here's the 3 ages. Okay?
Oh, I know this. I saw this.
You saw it?
You know what? Well,
tell me what it is.
I saw this. I know it. You know why? I saw this on one of the news channels. I don't remember which one.
What is it?
I have the video if you want me to play it.
No, I don't want the video.
60 years old.
No. You got the wrong one. The first time. You're right there. The average age of someone.
First time home buyer.
No. It's 40 years old. First time home buyer.
I have the video. I can play it.
64. 64 is the average age of people.
Oh, maybe that was the okay. Yeah, 60 years. Yeah, 60.
Yeah,
right.
64.
Okay. Yeah, that's crazy. That is crazy.
We went over this ago, but it hasn't changed much. What's the percentage of cash buyers in totality in the country buying real estate? What's the percentage?
Wow. Well, it's definitely changed over the last couple of years. A lot of people have purchased. I'm going to say cash versus getting a loan.
All cash.
All cash, right? Cash deal, right? Cash deal.
Yeah, cash
I'm going to
deal.
say that percentage probably went up to like 60-40 cash.
No, that's too high.
Is it too high?
26. It's 26.
Wait, 20.
26.
Listen, all I know is that for the last couple of years, everything's been a cash buy. Everything that I've seen, all cash. Well, I will say this though, my wife has been very busy in the mortgage business too. So
Well,
I guess
the refis, as soon as the rates eventually come down.
So hold on. So 20. So say a quarter of the market is all cash buyers.
Correct. That hasn't changed.
Now let me ask you.
That hasn't changed in like a year.
Let me ask you this question: out of that 0.25% of buyers, cash buyers, how many are investors?
That I don't know.
We don't know that one. I'd be curious to know of how many houses are bought as an investment property as opposed to owner occupied.
Yeah.
Right.
I would like to know that. This one shifted.
Okay.
It used to be 7 years. Now the average time a seller stays in their house.
Well, that's been forever, 7 years.
Well, it's up to 11 now.
Wow, up to 11
this fiscal year.
Dude, it's been 7 years for the longest time, and that's why I tell people
it'll go up next year. This time it'll probably be 12.
All right, hold on. I'm gonna give you a mortgage thing. You ready for this? And you can look this up. If you regarding something like this, and this is where the 7 years always came into play. If you paid your mortgage on time, if you took a 30-year loan out, you paid it on time, religiously, first of the month, every year. I don't care what the number is. I don't care what the rate is. We'll just start simple. $100,000, 30 years, pick a rate. Say 5%, whatever, 7. Doesn't matter the rate. And you paid that for 23 years. You got 7 years left. You started with $100,000. You got 7 years left. Guess what your balance is in 23 years? How much principal do you still owe the bank?
Oh, shit.
You got 7 years left. You paid it for 23 straight.
What was the original amount of loan?
$100,000. Make it easy math.
Okay. And you still owe 30?
You owe $42,000.
Yeah. Well, you know what, Washington?
Isn't that crazy?
Well, this is another thing that's crazy. The administration just floated this out.
The 50-year.
No, man, you can't go. That's like interest. That's like interest.
That's insane.
And the only way you're going to make out, only way you're going to make out on that
is if the values of properties go sky high.
Correct.
That's it.
Welcome to wisdom.
That's the stupidest thing I ever heard. Listen, for years and years they floated 40-year.
Yeah. Well,
no.
Do you know?
The only one who benefits is the bank.
Well, Franklin Delano Roosevelt came out with the 30-year,
right
after the Depression. I just finished a book. It's a big book. It's fascinating. And things are eerily parallel. It's called 1929 by Sorkin. It's a big book. It's like 500 pages. It's a page turner. I'm telling you, Vin, you read it because we're like the same age, and we had grandparents and parents tell us.
Yep.
You read this book, and Sorkin says a bubble's coming. It's coming. We don't know how big, but if you read this book, you're saying, "Holy shit!"
It's parallel to today.
There is going. I'm not going to say devastating, but it's going to be significant at best.
Worse than 2008?
Yes.
Wow.
They're all overvalued. There's overvaluation in all these stocks, and AI is driving it up. These stocks aren't worth what everybody's buying. It's crazy, man. But this book is it's a fascinating book.
What's the name of the book?
1929.
1929.
And you know what's funny about the crash? We all think the crash happened one day.
Yeah.
It did not. It happened over a period of time.
Well, it wasn't a big thing was the run on the banks. Wasn't a big thing the run on the banks?
It wasn't as nuts as you think, because it was a run on the banks, but it progressively after 1929 got worse and worse and worse. And Hoover named it the Depression, but it was like 11,000 banks went out of business.
That's unbelievable. 11,000 banks.
People, the suicides, jumping guns, jumping from buildings. These people who were multimillionaires now,
Yeah.
which they would be billionaires now, they lost everything, and
Well, a lot of that happened in 2008 too, my friend, because I was in the middle of that mess.
Well, I think this would
I was
be
actually ground zero of that mess.
the problem with me is I am a serial viewer of Bloomberg, which is not
Okay.
good. Monday to Friday, I constantly watch it, and yeah,
Don't you
I
think
just
you should maybe
but
diversify a little bit?
yeah, there should be diverse. Get it? This is the
No, I'm
thing.
talking about you. Instead of
Yeah.
watching one thing, maybe diversify
No,
and, open up your
they're on
mind a
top.
little bit.
My mind is very open. But what I'm saying is, and this is where I go into, before I do this, to give this last one, the average down payment across the country, every property, in this fiscal year, what was it?
The
I mean,
average down payment?
money down, yeah, money down on
Oh,
the loans. What was
I
the
don't know.
average?
I bet I don't know, but I'm assuming
Uh,
it can't be a lot. It's I mean,
26%.
really,
Yeah.
I would have never said that. I would have
Yeah.
saed there was more people going with less of a down
And
payment.
do you know what the most insignificant contribution to a buyer? Like, well, you would know. You have different ways you can get.
You either got a seller assist or a lender credit. Is that what you're talking about? Is that what you're
Yeah.
stuck? The lender credit?
The credit is
Lender credit.
insignificant. It's
Yeah.
insignificant.
Right. Wow.
So we always talk about what do we do? Seller assist, man. It's a
Everything.
gift.
I won't listen.
You
I won't,
order
absolutely.
you order the inspection, you pay
Yep.
500-600. Well, you know you're going to get 10 grand back
Yep.
because there's no perfect home.
No.
So you'll go, oh, I have to do this, do that. So you'll get whatever the lender is going to allow you. I mean, some restrict you, but if you can try to get 10,000, you'll forget about the inspection money. You'll get that back, but because you'll get a seller assist.
Well, the rules with the seller assist is up to 3% when you're putting less than 20% down, and anything over 20% you can get 6%. But it's always the word. But just so you have to listen, it's up to, meaning this. So if your closing costs, so if your closing costs are only 10 grand, but you're getting a 12,000 seller assist, that 2,000 just disappears. It doesn't go nowhere. Right. It goes back to the seller. Basically, he's not giving you that credit. So it's up to the closing costs, right? And that's your regular closing costs and your escrows that you can use that for. But anybody who buys a house, if they don't get a seller assist, I'm like, don't even put an offer in without a seller assist. Like, you have to get a seller assist. There's no doubt about that. Here's I got a question for you. Hold on. I got a question. Time out real quick. I got a question for you. 26% or 23, whatever you said, 23% down payment. 26%, right? Mm-hmm. To me, I just can't comprehend that. Because
look at the cash. Look at the cash.
That money is gone. Listen, you can go get a line of credit after the fact. I agree with that. But why in the world would you put that much money down? Now, I understand higher interest rates.
You have to do it to qualify.
Well, higher interest rates, I guess, you need to put, to get the payment that you want, right?
Yeah.
To get a lower payment because you lost that buying power. Right. But if not, like, that money you can't get that money back. Not for a while, because your cash out refi, you're limited to it.
How would you get a 50-year loan?
Oh my God. That is listen.
Ben, look, if the average stay of a seller is 11 years, you were talking about interest. You're not. You might owe money.
I can run a quick. I can actually run a quick amortization schedule. Hold on for a second. I'm gonna put you on full screen. So talk for a second while I grab my financial calculator. Hold on for
commercial.
All right, yeah, go ahead.
Hopefully, we are going to continue regularly these podcasts because I think they're really informative.
They
But
are very informative.
in this market, you got to go to the triangle. You got. I'm
Absolutely.
telling you, man.
Right.
You have to get educated. There are deals out there. They're
I also am
everywhere.
offering one-on-one mentorship now too. All right,
Right.
so listen, I've got my financial
Oh
calculator
man.
out. You ready? Let's do
Yeah.
this. Let's just do a simple $200,000 loan, okay?
Right.
And we're going to do 50 times 12, right? That is 600 months. 600 month mortgage. Oh my God. Okay. And we'll just put 7% in there. All right. Now
Right.
that payment is $1,203. Okay. But I don't care about the payment. I'm going to amortize it now. You ready for this? So I'm going to go other. I'm going to go amortize. And let's just say we do, after 20 years, let's see where we're at. So I'm going to put 240 payments in. Okay.
Right.
All right. So you ready for this? It's calculating it. All right. We started with a $200,000 loan. Okay.
Right.
We paid it for 20 years. Okay.
Right.
We made 240 payments. Guess how much do you think our balance is?
Well,
How
what
much
was the mortgage amount?
We
What
started
was
at $200,000 20
it's-
years ago. 20 years ago, we started at 200 grand.
Say 150.
You wish. $180,876. So you're talking 108.
You better pray for value, like equitable value going on.
That's
You
19,
better pray.
It's literally in 20 years you've knocked $19,000 off your
Do they
principal.
understand
Wait a minute. I got another one.
that
How
mean?
about,
I mean,
it's
soon as
horrible.
I saw that.
Hold on.
You and I know we don't know
Yeah.
exactly.
It's a clown
every
show.
number.
It's a clown show.
Yeah, it's
How?
like-
Okay, hold on. Here's the next one. How much in interest do you think you paid in 20 years?
Jesus.
All right, you started with a $200,000 loan. You paid it
And
for
what was
20
the
years.
mortgage payment? What's the mortgage payment?
The mortgage payment was $1,200, principal and interest.
You paid probably $1,150 each payment in interest, right?
Well, you paid it for 20 years.
No,
So how
times
much?
1150 times, the 20 years.
All right.
That's what I say.
All right. Well, it's $269,687. But the saddest thing, you've only reduced your principal by $20,000.
Right.
Now,
and if let's say it's a down market, let's say we don't know what's going to happen in the future. Let's just say the property you bought in a certain area never appreciated.
Right. That doesn't appreciate. Right.
Then
you're done.
You're
done.
You should have rented.
You would have been better off.
Yeah.
Like you literally.
I just lost one of my ears, by the way. So.
All right. Well, you still sound good here. All right. Well, you sound
no,
good.
No. My ear, my headphone.
Your earpiece. I got you. It went dead. But that 50-year. Listen, for a while ago when I was in the business, they floated around 40-year loans, right? And they were trying to do when the market was low, they were thinking, oh, let's do a 40-year to get the buying power back. But all that does is helps the bank and screws the borrower. That does not help the borrower at all.
No.
Do you want to know?
It'll reduce the payment.
Big deal.
But it's not going to do anything.
Listen.
Well, that's the whole goal, is to fool
the
buyer to thinking.
Yes, that's all.
It's just a car loan. The car loans are going up to 7-8 years.
Yeah.
Because
you never pay it off.
That's even worse because the car really depreciates.
Because it depreciates. It depreciates. You never. Yeah. All right. Here's the question I have, and this is where I have an article. I should have brought it. I don't know if I can find it real quick, but let me just say this. They are looking at it completely wrong. Completely wrong. I'm going to ask you a question. What do you think the biggest impediment is of buying a house? In any market, whether it's high, in any market, what's the biggest impediment?
Down payment.
Down payment. Okay. You know and I know that I've got a program that solves that problem, right? Mm-hmm. So instead of looking at 40-year, 50-year loans to reduce the payment, why not use the method that me and you know very well, inside and out, like the back of our hand, me better than you, right? Why
can't believe
not use
this guy.
why not use that, right?
Yeah.
Here's what I am telling you. Blackstone or BlackRock bought out American Home Finance for $6 billion,
Oh,
right?
did they? Okay.
Okay, yeah, but literally it failed because lease purchases are the
Oh, that's
worst.
right. I saw that. You're right. You're
Yeah,
right. I
right.
saw
So it's the worst thing.
Yeah.
I guarantee you, if Blackstone or BlackRock or anybody gave me $6 billion, I would completely revolutionize the way the housing market is in the United States of America right now. I myself can literally change the whole
Well,
entire.
can I listen? Can I be your top lieutenant? You know, you're
Of
going to
course,
need something.
yes,
Okay.
yeah,
All
yeah,
right.
of course. But I am telling you, I can literally revolutionize. Listen, I solved, and you know this program because you know
Yeah, we know it. We've
we
done
know it
it. We've
inside and
done
out.
it. Yeah.
And
Okay.
it's not subject to or wholesaling or lease
No.
purchase bullshit.
No.
It's none of that bullshit, right? But it literally solves the biggest impediment of people buying homes, right?
Yeah.
And that's
Yeah.
what. Listen, I have an article, and let me see if I can find it real quick, right? And the article says in here, and you know why I love the article? I love the article because it uses one of your famous things, right? Think tanks, right? Anytime you hear like the think tanks, you know that you're just screwed, right?
Yeah.
But what it said in there, and I'm seeing if I can find it real quick, right? It talked about the think tank and all the other people are trying to figure out a way to get the housing market done, right? So I wish I could find this article. If you give me 1 second, I'll find it for us. Because I was like, this is, here it is. Okay. Is this it? Yep, here it is. I got it. Okay, you ready for this? I want to read it to you.
Right.
Okay. Now this came from a magazine that's sent out to mortgage brokers. Now I'm no longer in the mortgage business, but I still get it. Okay. Now, me and you just talked about the down payment. Now, as you know, there are some no down payment loans that you can get out there. What are they? The first is if you're a veteran, you can get a VA loan with no money down. Okay.
Right. You can even finance a closing cost, can you?
Yeah. Yes. I don't want to say for sure because I never did VA. My wife's an expert at it.
I'm pretty sure.
I never did VA. That was the FHA and VA were not my cup of tea.
It's the only thing they do for the vets anyway. Which is
they keep. Yeah, it's horrible how we treat our vets. Okay, so that's one way. Now a lot of people, less than 1% are vets out there. Okay, so now you go and you say, okay. The other way is called USDA, United States Department of Agriculture. They have 100% financing. Okay.
Do they?
Yeah. But it's rural. You got to live in a rural Port County.
Oh, okay.
And it is income restricted. Okay, so you can't make a certain amount of money.
Right.
But it's a very good program. Okay, so USDA, you could do 100% financing. Now, FHA has done things like this. Now, FHA, you put 3.5% down. Okay.
Right.
The only problem with FHA is that you got to get MIP insurance, and it's a premium. You can finance it, but it's a premium up front, it's a couple thousand, and then you pay it every month. It's not like PMI where you can get rid of it when you got 20% equity. This stays with you for the life of the loan.
Oh, it is. Oh,
so it's not. So that's the bad thing about. The only bad thing about FHA is that MIP insurance. Okay, now you could do an FHA loan and get what they call down payment, DPA, down payment assistance, or they also have grants and things like that where they give people the down payment and the closing costs. So basically, literally, one of my students, he's 21 years old, just bought a house, his first house. He paid for the appraisal on his credit report. I mean, on his credit card. His appraisal and credit report on a credit card cost him $500. He made settlement on his house. He's been living there 6 months now. He's going to live there another 6 months. He's going to rent it out and make $1,000 a month. He's 21 years old, okay? When he started with me, he had no credit, zero credit. So we had to build up. He started with me when he was 19. They're like, oh, why did he buy a house? Okay, well, he had no credit. So we couldn't even, if we did a creative financing deal, he couldn't refi because he couldn't get a loan because he had zero credit. So we built his credit profile up, right? He saved some money, and that's the first way we did a deal. So now, but not a lot of people want to go FHA. But here's what this article just sent to me. the rise of the down payment assistance programs and shared appreciation mortgages. Lenders, here's the word that you'll like, and innovators are expanding strategies in response to the widening affordability gap. Today's affordability gap is not just a low-income issue. It's a market-wide challenge where even credit-worthy middle-income earners struggling to overcome basic barriers to home ownership. They're talking about the down payment, okay? I have the solution. I've already got it done. You already know we do. You know we do. Me and you talked about it a million times. Now, it goes in to say increasing interest rates, low inventory, and rising home prices have created substantial challenges for today's home buyer. They are confronted with growing affordability pressures. I got to load it up now. Hold on. So let me get to it again. Sorry. Okay. It says here, they're confronted with growing affordability pressures, which require innovative lending solutions. That's why they're talking about a 50-year loan. That's not innovative. That's friggin' stupidity. While existing homeowners have enjoyed significant equity growth. In response, mortgage lenders and industry innovators. Who are these industry innovators, by the way? They're the dumbest people I've ever met in my life. Are expanding affordability strategies by offering new products that reduce upfront and long-term costs. Among the most promising tools are the down payment assistance programs and shared appreciation mortgage will grow increasingly customized to meet the needs of an evolving borrower base. It's telling you right there, okay? The problem is people can't come up with a down payment. These innovators are trying to figure out a way. The way has been around for hundreds of years. We know the way.
What's happening too with the affordability, what's going on now? They're not going to be able to save more money.
No.
There's not the ability.
Not with inflation the way it is and everything else.
No. Because when you go to the grocery store, which I do because I'm by myself.
Me and my wife just talked about this today. Me and my wife just talked about this. Go ahead.
My other half comes next weekend, and then I go back and forth to Florida. But I actually go to the grocery store. So.
Me too. I'm the shopper.
Yeah, you're a cook. I'm not a cook, but I just noticed that I buy.
Yep.
That the bill is they're just going up and up and up.
Listen.
And
listen. I have 3 of my sons still living with me, right? So it's me, my wife, and 3 sons. Mm-hmm. I went to the market the other day. I dropped $700, and literally the food's almost gone. And 2 weeks before that, I dropped $500 at the food store.
Boys can eat, man. Young boys can eat.
$1,200 in less than in a month's time.
Yeah,
and that's basically every single month. It's insane. Yeah. It's insane.
What they're also saying, I saw a report on my favorite.
Luckily, eggs came down though. Eggs are back down to being normal though.
Well, they're saying the fast food. The restaurants are going up now, and the fine dining
it's going down.
Going down.
Yeah, it's too expensive.
So McDonald's is going up, Wendy's is going up. They're Taco Bell, they're increasing because people are like, screw it, I'll spend $5-10.
Right.
That'll be it. So, yeah, I mean,
it's sad how much everything is.
It is a problem, and home ownership. I mean, you saw 40 years. I was 24 when I first bought my house, first time buyer. It's 40 years old now.
Yeah.
And
it would have just been paid off. And it would have been just paid off. If those 40-year loans were out there, now they're 50 years. Yeah. That to me, that's the dumbest thing I've ever heard of. I have to be honest with you. You listen, the problem is these people cannot think outside the box.
Yeah.
And that's where I'm going to throw a plug to my new company called The Real Estate Underground by Vinny, where you can come to class at the Golden Triangle Academy for only $59, or for those that want some one-on-one mentorship, you can go to The Real Estate Mentor with Vinny. And there's my shameless plug. But here's what I can tell you. You've got 40 years of experience in doing all of this stuff, right? We are not. The reason why we named our this podcast The Guru and the Other Guys, because we make fun of the gurus, because we know how stupid they really are.
Yeah.
And the shit they spew is disgusting. So we give it education. We don't talk about it. And like I said, these innovators that they talk about, right? And by the way, the article goes on to talk about the down payment, the down payment assistance, and all that, and a shared equity mortgage, which that's one of the worst ideas as well, right? Because you're giving all your equity, you're giving most of your equity away for no reason. They cannot think outside the box.
You're right.
And that's why,
that's what we should come, our next podcast.
Okay.
There's a few things I want to talk about, but
do you want to tell us what they are?
Well, one
you want to give the folks a preview?
Well, this one I don't even know. We have to do, maybe because it's financing. Our favorite boy.
Oh, which one? Is it your boy or my boy?
Pace.
Which one?
Pace.
Don't even say his name because I can't stand that guy.
So he said one of his students, and he was there in front of the place. It was kind of a dump. He bought it. He abandoned Section 8 and went to a nonprofit. Then he said the cash flow right now is $8,000, and next year it'll be up to 18,000. Now, I don't even know this, and we've been around forever. I don't know if I guess it's possible, but if it's a nonprofit, what is he, the chairman, and he's getting 8 or 18,000, and if he sells it, where does that go?
Here's what I can tell you. I would not listen. Here's what I would tell you. I wouldn't believe one syllable that guy utters. Not a syllable.
But there's so much. This is our audience, and this is why we have to probably double up each week.
Right. Okay.
To
get caught up.
So much has
You're right.
happened. And like where I'm sitting now, I have one podcast on the prices, and the inventory is still low. And we're talking, 10 million, 14 million, 9, and some are selling.
That's insane.
I mean, 7, 8, well, this couple of weeks ago, 7.8, 9.7.
Jesus.
But it's, the $1 million.
But see, when people have that kind of money, they have that kind of money that the market's not hurting them.
But the $1 million stuff, or 1.5 or 800, they sell pretty. They don't stay on the market that long. But it's like, but when you're looking at these numbers and we're talking $1 million, 1.5.
Yeah, like it's nothing.
It's like now, we're getting used to the billions.
Yeah.
When we hear we're not even saying, wow, 5-6 billion. We're like,
it's crazy.
Yeah.
Listen,
I mean,
listen.
There's so much stuff to talk about.
When I started when I started in the mortgage business, right? Mm-hmm. A jumbo loan, meaning the cutoff where Fannie Mae and Freddie Mac would lend, even FHA, FHA is always a little bit behind, right? But the cutoff, meaning, okay, after this, it becomes a jumbo loan, right?
Right.
When I got into the business, it was 400. It was like $202,000. It's almost $1 million right now.
Yeah.
Right?
And what's your feeling of them wanting to take it private?
What's
is
that?
Doable? Taking Fannie and Freddie private. That's what they're talking about.
Well, I mean, they were.
Out of the government's hands. They
were until 2008 when the collapse happened.
Yeah.
And then,
they wanted
then the government bailed them out. So yeah.
I think I'm not in favor of that, because you're going to come back to that again. There will be a bailout.
That's what I don't want. I don't want them coming and bailing them out again. You know what I mean?
Yeah. All right. Well, why don't we?
We can wrap it up with this one, right? It was our welcome back after a long hiatus podcast. So we'll have to jump. Listen, we'll jump back in and do another one, right?
I think
real
we're
quick.
A year older. Yeah.
All right. Well, listen, we can give the people a couple of podcasts a week till we catch up. So why don't we do that for the folks?
And you should. I always say this because people think we're just starting out. We have some old videos.
Oh yeah.
We should put up a few minutes and.
We can listen.
A lot of that content
I
content.
can
It's good
listen.
stuff. It's good stuff,
I
man.
can pull some of that up. I still have
Yeah,
it. It's great stuff.
it is.
I can
But
post some of that
it's
stuff.
we've
I
been
can show
doing
some.
this a long time.
I can show some clips of it as well. It's awesome. They're great.
We've been doing this a long time.
Yeah, we
It's
have.
not like we're just stumble
Right.
bums and we come on to
Exactly.
the,
Exactly.
it's just like
Exactly.
that. All right, man.
Well, we'll give the folks what they want. All right, Guru.
All right.
It was good chatting with you. We'll see you again real soon because we're going to give another podcast in a couple days.
Yes.
All right,
Peace
brother.
out, brother.
Enjoy. All right. I'll
Thank
talk
you.
to you.
See ya.
Enjoy.
Bye.
See you, bud. Yep. So there was the Guru.